Hey there, Singaporean investors. Tired of sifting through endless news, trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguana's daily SGX Market Digest for Aug 8, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and Iggy's unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed 1,000 reads and 58,000 likes, and I've produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I also focus on regional and global economic trends, giving you that broader context. So let's dive into today's most important SGX movements. You don't want to miss what's impacting your portfolio right now. The Straits Times Index opened softer at 4,239.64, down 0.43%, as regional sentiment turned cautious after earnings and tariff headlines, with notable early pressure on Sembcorp, SIA, OCBC, and Genting Singapore. Yesterday, the STI closed up 0.7% at 4,258.15, riding regional gains despite the tariff overhang, setting the stage for today's mixed open. Now let's zoom in on UOB, where Q2 numbers showed a 6% year-on-year net profit drop to 1.34 billion, missing consensus, with NEM at 1.91% and interim dividend at $0.85. Management highlighted a 12% year-on-year rise in trade loans and ongoing M&A openness, and shares closed down 18% to 35,081 after results. The trade loan momentum hints at ASEAN trade flows, holding up even with tariff noise, but margin pressure and higher credit costs cap near-term upside. Watch fee income resilience and guidance for loan growth shifting to low single digits. SGX's H2 FY 2025 net profit dipped 2.6% to $308 million with EPS at $0.288. The board proposed the final quarterly dividend of $105, taking FY 2025 dividends to $375 if approved, and H2 operating revenue rose 4.4% to $688.4 million. Shares ended yesterday at $16.34, up 0.4% before results. Higher recurring payouts plus revenue growth from derivatives help offset softer equity activity, and the dividend uplift of 8.7% annualized supports income portfolios as SGX talks up IPO pipeline and new structured products. Genting Singapore's H1 profit fell 34% to 234.7 million as revenue dropped 10% to 1.2 billion, with gaming revenue down 12.3% to 839.4 million and room revenue down 19% to 98.4 million. The stock actually closed up 0.7% at $0.755 before results, but early trade today saw pressure alongside other earnings laggards. Demand mix and VIP hold volatility are likely in play, and with travel steady but spend quality uneven, investors may reassess earnings run rate and rely more on cost and non-gaming levers to stabilize margins. Sembcorp Industries' H1 earnings slipped 1% to 536 million on lower gas turnover and weaker Singapore generation spreads, with Vietnam's Phu My 3 no longer contributing. Shares had climbed 1.3% to $7.80 yesterday, but plunged more than 13% in early trade today on results shock. The market is recalibrating expectations for Singapore power spreads and asset contributions, and for renewables-led narratives. Near-term earnings torque still ties back to merchant pricing and contract resets. Singapore Land Group's H1 FY 2025 net profit rose 7% year-on-year to $111.4 million on revenue, up 8% to $368.3 million. The stock gained 3.9% to $2.91 ahead of the print, reflecting steady property income and development progress signals. In a higher-for-longer real estate world, Disciplined balance sheets and stable office and hospitality exposure can still grind out EPS growth, and the read across to parent UOL and sector REITs is supportive if funding costs ease later. Today's tape shows a push-pull between earnings downgrades and dividend defense, banks guiding conservatively on growth and margins, SGX leaning on recurring cash returns, industrials reacting hard to spreads and asset mix, and travel and leisure normalizing off post-reopening peaks. The most crucial takeaway is that policy and tariff shifts are now directly flowing through guidance and multiples, changing near-term winners and losers even within quality names. What to watch and how to position. Lean on cash return visibility where earnings beta is lower, like SGX's dividend step up and diversified fee engines. In banks, tracking them glide paths, fee income mix, and credit cost run rates, as ASEAN trade finance can cushion but not fully offset margin compression. For utilities and energy-linked industrials, stress test spreads and one-off asset contributions, as volatility around prints creates both traps and entries, so stick to risk budgets. In consumer and travel, model more conservative gaming and room assumptions, as catalysts likely need mix improvements or new attractions to re-accelerate. That's the scoop for the SGX today. Aug 8, 2025. Navigating these daily market shifts is crucial for wealth growth right here in Singapore. If this digest was helpful in real-time analysis, urgent insights, and a daily heads up on crucial market moves sound useful, our premium membership is for you. It's just $3 a month, about the price of a cup of coffee. Think of it as your daily dose of market foresight from my desk. Ready to stay ahead in the Singapore market? Click the link in the description to become a member. Don't forget to like, share, and drop a comment with thoughts on today's market. I read them all.